Hello friends, let's discuss about the Nifty call option buy side. When we buy the Nifty call, uh, we assume that Nifty goes from this point to higher, so that we will get the money. If the Nifty goes down from this point, we will lose the money. If you buy the Nifty call option, okay. And also in option terminology, a lot of people call it as a long for buying the call option, and for selling the call option, people call it as a short. Now we are going to discuss about buying a long option of Nifty. Let's say assume that Nifty is right now around here, 17,150, the closing price. Okay, now I felt that Nifty will go from here to upper side. That nobody don't know. Few people see few indicators and some news, some global cues. Some people see the SGX Nifty, US, and oil prices and all, and they will assume that there are chances of Nifty going up, and there are chances of Nifty going down. There are many assumptions will go, but let's discuss about Nifty go from here to upper side. Okay, let's go to options Obstra. Okay, and Nifty is around, spot price is 17,150 and the future price is 17,260. Okay, and the expiry is the March expiry. Let's take the March expiry. Okay, if you take March expiry and 17,200 is the spot price, sorry, option price, and this is for 31st March expiry Nifty I am going to buy. Okay, what will happen if you buy? So I bought the one call option. Okay, so the premium around 8,600 we required the premium, and 31st March is the expiry, and 17,200 CE. Okay, and if the market goes up, then you will get the profit. Okay, if the market goes down from this point, you will lose the market, you lose the money. So now what is the break even here? 17,373. So when you start seeing the profits after 17,370 break even, if crosses, then only you start seeing the profit. Before that, you don't see the profit. Okay, that is the disadvantage in the call option. Call option have the probability is very less, but if that is really works out, you whatever your assumption is correct, then you will get very good. If the 8,000 rupees, if the Nifty within 4 trading sessions, if Nifty gone to 18,000, then you will get 33,000 rupees. Okay, this is very huge amount, right? Almost 4 times you got in 4 days. Okay, but it is not never going to happen, because Nifty always, stays range bound. It may go here and it may come down, and nobody don't know. It looks like the current trend is sideways. Okay, if it is sideways in next 4 trading sessions, if another 4 trading sessions, if it is in sideways, you will lose the money. All your 8,000 you will lose. Okay, that is the reason better not to go with the naked options. Okay. But when to go to naked options? There are techniques. A few techniques. Generally, I do the naked options very rarely, but now I will show you when I will do the naked option. Okay, if you see here, 20th December. If you see, 20th December, there is a big candle and it is having hammer. And next 21st December, if you see, there is a doji kind of thing. So this is somewhat confirmation that Nifty may reversal from here, and also there is a good divergence, RSI divergence. This is, I strongly believe, this RSI divergence, And if you see, RSI, this is opposite, exactly opposite RSI is behaving. And see, this kind of setup. And if you see Nifty fall around more than 500 points consecutively 3 to 4 days, then if you see reversal, then this kind of scenarios generally I will go with the Nifty call option, because there is a fall and there is a doji and RSI divergence. There are a lot of confirmations I have. Then only I will go. And the current market conditions, I don't go with the long option because there is no confirmation. This is purely sideways. If the Nifty is in sideways, you will not see any money. Okay. And also here one confirmation. And also if you see here, there is one more confirmation I can show you. See here. This is one more confirmation for buying call option. Okay. Yeah. See here. This is one more confirmation. This is RSI divergence. I can say this is also RSI divergence, and here also RSI divergence. You can see. See here. Yeah. This is also RSI divergence. Two times we see RSI divergence. This kind of situation, if you see, one is at 20 and 21st December, the another one is March. So once in a 3 months, once in a 2 months, you'll see this kind of setups. Then only you can go with the long call. Otherwise, don't touch the long call. Or you can also try here, but I don't convince here. This is the good setup for to go the long call. Okay. Okay. You took the long call. Okay, you took the long call means you bought the call option. Okay, let's say you bought the call option for April expiry, and you spend the amount of around mostly it is 22,000 or 22,300 bucks. You spend money to buy the call option, but what is the break even? Only after 17,748 crosses, then only you will see the money, because you already paid the premium. You have to cover your premium. After you're covering your premium, then only you will see the profit. Okay, so call option option buyers having only one option, that is if the market goes up, then only you will get the money, you will earn the money. Okay, but option seller, there are two options they will have. One is the market stays within the range bound, or if the market goes above, if the market stays within the range bound and market goes or market down, there are two options they will have. But option buyer will have only one option, that if the market goes, then only you will get the money. So 100% sure, you should be 100% sure that the Nifty will go up from here. How do you confirm? You have these two setups. Generally, I prefer these two kinds of setups, and once in a 2 months or 3 months only you will get. More than that, I don't think you will get. Okay, intraday, maybe intraday people will get scalping and all they will do, but for positional trading, don't go with the Nifty or any other options within any other stocks naked options, because we will buy option. We assume that the price will go up within few days, but there are many factors will play here. So it may not go, it may stay there. So you will lose the money. Okay. So now let's assume, you took the call option and the market started falling. Okay, you spend around 23,000 and the market started falling. How to save your money? If you exit with the stop loss, that is one option. Okay, but you have 1 month time, right? Till April you have time. Okay, till April, market may fall another 500 or 600 points, it may reverse. Okay, so what you do if the market is falling and you need to save your premium, right? Then immediately what you can do, how much premium it is? 447. Then you can come down here around 200, around 207. You sell two call options and you can save your falling, and you can come out with the minimal loss. you can come out with minimal loss. Okay, this is one option. If the really things went well and the market reversed, and at the time of expiry, by the time of expiry, you will see this profit. Okay, this is this option. When you use, only you assume that market will go upper side from here, but due to many factors, due to other reasons, market coming down, then you use this option, use this facility to save your premium, okay, and to come out with the minimal loss. But it requires some margin amount around 18,000, because always to play in the options, you need to have some additional margin amount and some additional amount to keep to for adjustments. Options having many options, right? That's why you need to have some additional amount to save your trades. Okay. Thank you all. Hope you all understand this one, and I will come up with more videos in future. Thank you.